Dr. Hassan Mahmud, the Director of Monetary Policy Department at the Central Bank of Nigeria, is with me as usual. Dr. Mahmud, good to see you. Every 88 weeks.
We meet here.
We meet here. Shouldn't we break it? Or it should just be 88 weeks tonic?
Well, it's statutory meetings, so we follow that protocol.
Yeah. Okay. So
nice to be here. Thank you very much.
Yeah. Welcome to the program. Where do we start from? In fact, in the last 3 weeks since Russia-Ukraine crisis started, part of my analysis and even the question that I posed to most of my guests when we're talking about economy and perhaps some of those positions and actions we've been seeing from Russia-Ukraine, part of my questions to them were, in January MPC, there was no Russia-Ukraine.
Yeah.
March MPC, Russia and Ukraine moved so much future. And you guys did not disappoint me yesterday because there was no Russia-Ukraine 8 weeks ago. What were the major sticky points that were really considered at this March one-day policy meeting? What were really the major sticky points?
Okay, thank you very much. From the global scene, 3 critical issues. One, like you said, Russia-Ukraine. And this is important because Russia, Ukraine are important in the global ecosystem in terms of commodities. Combined, they are the largest suppliers of wheat and other cereals. They take global, about 65% of global supply of sunflower, into urea, potash. All those are inputs for fertilizer. We import part of that. The biggest importer of their wheat is more or less Egypt. We saw recently Egypt has already started depreciating their currency. They're also exposed to the IMF. So they're a major player in the global economy. In the oil and gas sector, outside of the OPEC, Russia is the largest producer in that space, particularly for the European economies. You know, that's where the major consumption takes place. So you see that developments in Asia, then you have the sanctions. Their central bank reserves was frozen. All investments in the international financial market that are Russia-related are also blocked. Other countries are already not banning the import of Russian gas, Russian wheat, and Russia is also banning the export of their products. So you see that crisis crystallizing. How is that important to us? One, because we are also playing a part in the importation of some of those products. You see imported inflation already crystallizing in Nigeria. You saw the numbers for the recent inflation numbers, core inflation picked up.
Okay, Dr. Mahmud, just hold on a bit. Let's quickly take a break. When we return, Dr. Mahmud will continue the analysis on the MPC. Do stay. Hello, 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 and welcome to the program. This is Moneyline with me, Nancy.
So we really have to keep thinking out of the box about how to get money to the least accessible in our society.
Everything has to be re-examined in our economy, in our health system.
We are also ensuring that government does not continue to manage this refinery, because government is not really equipped to manage refinery.
We need to come forward and do something different, so that we move from the situation of looking at things from purely a consumptive approach to a productive environment.
The government and the people need to really agree on the need for a departure from business as usual.
We are now on a process of recovery. It is what I call a bumpy journey to an uncertain destination.
This is Moneyline with me, Nancy. Naji, it's so nice to know that you're joining us again today. All right, welcome back. Dr. Hassan Mahmud, the Director of Monetary Policy Department at the Central Bank, is still with me. Dr. Mahmud, just before we went on that break, can you just land on some of the points you were making? Yeah,
we were on the Russian-Ukraine crisis, and I was just mentioning the importance of that economy in the global scene and how it affects us. Those products that I mentioned, those commodities, including the minerals, already the prices are already going up. globally. So those that are going to be importing that as part of their inputs are already building that into their cost. Of production. So you see that affecting prices, energy prices, and how that feeds to global aggregate demand. And that's why even at the global scene, the projections for output growth is already been moderated downwards because of the impact of that. The other important factor in the global scene also has to do with the high inflation in advanced economies. It's been persisting, and most of the economies are already, you already mentioned here now that the United States is already tightening, is already starting to do their normalization and asset buyback. The European countries, compounded with this Russia-Ukraine case, is also going to be having a lot of issues in that on that scene. So you see interest rate going up at the global scene. Implications of that is credit flows, foreign capital flows to developing and emerging market economies will also slow down. Rates will go up. Instruments or facilities that we've taken that are dollar denominated or foreign currency denominated, payback now will be costlier. So that's another side of it because of that action they are taking. So the inflation, the normalization is playing a big role. At the domestic scene here, inflation numbers are still high. We saw a tip in February, slightly particularly coming from core, even though food inflation numbers went down. We see that the growth, GDP growth numbers are still a bit fragile, even though quarter on quarter for the last 5-6 quarters, GDP has been growing. If you analyze or take year-to-date numbers, you see that maybe from this third quarter to the second quarter, you see that the numbers decline. But if you look at it quarter on quarter, GDP numbers are actually growing. But that is still fragile because it's confronting a lot of headwinds that are likely going to impact that. The external sector is also seeing still high volumes of import, so you see the balance of payment position, also the surpluses we had just after we came out of the COVID is already narrowing gradually because you still have huge import without commensurate export to follow that. The RT200 of the central bank and other measures, remittances, incentives are all to increase that inflows of FX. So those factors play a very big role in the domestic scene. Other issues, infrastructure, insecurity challenges that we have that is affecting food items getting to the market, particularly the urban centers, is still an issue. And other frictions we have within the domestic economy, all the factors that are being considered to take the decision the MPC members took.
Okay, let's take a look at some of the decisions. I don't want to go into the core decisions because we know that the MPC has maintained status quo for close to 17 or 18 times in the last 2 years or even more than that. What I really want to ask you at this point is part of what the central bank governor did talk about, or the MPC chair did talk about yesterday, is that higher energy costs, higher transportation costs, and higher transportation costs is also impeding logistics, which is also inflationary. I want you to explain in simple terms to Nigerians right now, help them understand this, because also part of what was said yesterday is that inflation would considerably be high. We are on uncertain terms. What I guess that many Nigerians would hear is that prices will still remain high or be higher. So explain to Nigerians.
Okay. Why inflation is very important is that it erodes your real income, in the sense that even if your earnings, your salary or whatever that you are getting remains static. If you are earning 100,000, for example, every month, and it remains static, but inflation numbers are going up, the value of that 100,000 is reducing. So as you go to the market every other month, as you get your salary, your 100,000 is becoming 80,000, 70,000. So if you have been eating rice and other things, you move into gari, you're moving to less favorable nutritious foods that you want. So it erodes that real disposable income, and that is why it is very, very critical. I don't even want to go to the investment side because that is not the key side, bothers the poor people or the generality of the people. So it is very important that, one, inflation is low, and two, that it is stable. You know, it stays, prices remain moderate. For those that travel around the country, you go 5 years and the price of a particular thin bread is the same after 5 years. It's because the inflation numbers are just low and stable. So you can predict, even the producers can be able to predict that, okay, if I do this and I have a projection for the next 5 years, this is going to be my return. Inflation will not wipe it out. So it is important that we have that. And what will drive, because it's a function of demand and supply, what will drive prices down will be supply. If you have enough of it within the space, commensurate with the number that the people need, you know, we have that balance, then you see the prices are moderate. It is also important to emphasize that if what is supplied is more than what the people need, then those that are supplying will also suffer, because so much in the market, the prices go down, so they are not able to sell off and continue production. In the same vein, if what is supplied is far, far below what the market requires, you know, like the volume that the individuals require within the economy, because everybody wants it, particularly if it's like food. Whatever it is, you must eat. But if it's like food, then you start seeing, because of that small quantity, those that can offer higher are able to clear the market, while those that don't have the resources to beat that higher prices are left out of the system. So it is important that we have that, what we call equilibrium, you know, that balancing of that space, so that the production meets the demand of the economy. When we go through the second stage, that's when we start talking of earning revenues for the economy, such that if you're able to, you know, feed the domestic economy, you now export. The export now brings some inflows, and that will help in other areas, government revenue, your own personal earnings, and all that is important. So the central bank's primary mandate is to watch that prices and ensure that the prices, one, reflects the fundamentals of the economy, two, the activities that are within the economy are able to drive that supply to that stage. So when central banks comes and start talking that, oh, we cannot bring down inflation because structural issues are playing a role there, you cannot, because the supply side is more rigid. You cannot produce rice because we need it today, produce it tomorrow. You have to plant it, you have to weed and everything, and it has its own gestation period, 3-4 months. So that short period, we need to create a strategic loop where, even though production is not going on, that is farming and whatever is not going on, there's enough in the market till the next harvest season. So those are the sequence that things need to be, so that supply is maintained, is sustained over a long period of time, and then prices remain moderate. I think that would be kind of simple narration I will give in terms of the role of inflation, how demand and supply play a role in determining the prices.
Okay, for what we're experiencing right now, because the past few weeks have been really so harrowing for many Nigerians, rough and tough. For what we're experiencing right now, would you say is more of a supply side disruption, or more of a demand pressure, or more of perhaps Russia-Ukraine adding to logistics concern, or it's about our domestic problems that were also heightened by these exogenous factors?
Nancy, I think it's all of the above. They play a role, but in different proportion. How will the Russia-Ukraine case come in here? I mentioned their role in oil prices and gas, diesels, and now, even though we talked about food inflation and the cost of food items, there are inputs to food production. If you produce the food in the villages and in the farms, you need to bring it to the cities where the demand is. You're going to put them in vehicles, transportation. We are all aware of the prices of PMS and diesel. Those that are going to do those logistics and take it to the market will build in that cost to the cost they bought it from the farms to get to the you have storage. So by the time the cost of petrol and diesel goes up substantially, definitely will feed into the cost of the foods. So you see food inflation going up. So you need to also look at those inputs. The roads, you know, if it takes you, usually if the road is good, 1 hour to get to a particular destination. Now because the road is bad, it's taking you 5 hours. Or even there's a stream there that has cut off the road, so you cannot even go through. those logistics are also very key in determining the end price. So the cost and efforts that it takes for you to get those products to the sales point builds into the cost of production. So you see prices going up in that area. Insecurity challenges also distort that supply chain, in the sense that because some cases that we've had now is farm products are not even, you are not allowed to harvest your farm products. So the bandits or whoever come and put particular taxes or levies on the farms that if you don't pay that, we will drive you, we don't allow you to harvest your product, or bring people like the cattle rostering and stuff like that and pack those items away. Those are security challenges that stop production from farm gates to the markets, to where they are going to be required. So those issues play a very big role. The structural issues relates to infrastructure, power, these roads that I'm talking about. This,
which the fiscal authorities should take
charge.
Which
everybody should play a role, because the argument now is the private sector should also be empowered to invest in these areas. The InfraCorp and other investment vehicles that have been created are to also relieve the fiscal authority, because we're seeing the role of the fiscals being constrained largely because of these inflows. We talked about the oil and issues around the supply revenue inflows. There was a time here that for 3 consecutive months, nothing came in from for oil exports. So the FAC was not having anything from oil. NNPC declared zero. So you see that is straining the government largely. So government does not have that, war chest to embark on some of this basic infrastructure, which you need, because the farmer that is going to produce his food does not need to do the road. So other people need to provide that, which is a public utility, for the general public to use. So government needs to play a role in that side, but we're also conscious of the fact that there are limitations to government fiscal space. So we can't get that done. So there's a need for a private, and that is also why you see a lot of this has been shouldered by the central bank. This development finance interventions, we can't just sit down and say, well, this is the role of government or fiscal authority, so we'll just produce. If it doesn't get to the market, fine. We've not achieved anything. Okay.
If we take a look at this, because I've heard a lot of people say that even before this meeting, what will be the response to the notion that MPR does not carry any effect anymore? Bearing in mind, MPR is at 11.5%, inflation is at 15.7%, so it doesn't really match up. It doesn't really carry that effect anymore. What would be the response?
Well, I think let me explain this. The MPR is supposed to be a signaling tool. How it operates, and you always emphasize that I go very, very simple. But this area will be a bit difficult for me to go very, very simple. The fact is, the monetary policy framework we operate is called monetary targeting. Monetary targeting means we target the volume of money in the economy, because the monetary theory is of the fact that the volume of money in the economy determines the prices of domestic goods and services, with other assumptions behind that thing. So what central bank does is to control that volume, so that rates and prices will be moderated. And that's why sometimes if we don't use the MPR, we use other instruments within the banking system, CRR and other tools, almost, to tighten that space, so that we don't have, because if there's too much money in that space, the rates, OBB, Treasury bills fall. The ability to raise funds, even for government, also is highly disturbed, because banks don't want to get into that space. The more the rates go up and reflects the fundamentals of the market, the better for what's called savings mobilization in that economy. So MPR, yes, there's this argument that the transmission mechanism is weak, in the sense that it doesn't necessarily mean that if you increase or if you reduce MPR now, it's the other way around. If you reduce MPR because you want to expand credit growth and other, if you reduce MPR, it doesn't necessarily mean that the banks will reduce their interest rate, because other factors play a role in that cost of fund to the banks, including these structural factors and infrastructure issues that we have mentioned. So the premium that banks build into cost of fund is MPR and other factors. So what we are saying in this space is that MPR is a signaling tool, but those other factors also play a role. If you don't take care of those other factors, then the sensitivity of the bank's rates, lending rate now, to MPR will be extremely weak. So that is the point. So, but central bank uses that as a signaling tool, like this is where we're going. We're likely going to be tightening. That is supposed to change the behavior of investors in those markets and also determine what we call inflation expectation, what people think prices will be, because it determines their production levels.
Just as we close, what do you think that Nigerians saw from the MPC of yesterday? Is that a tightening signal? Like at the beginning of the program, I did talk about Fed Chair Jerome Powell. He's come out openly to say they've tightened already. There'll be 6 times. I was listening to him, was it yesterday or so? He said at least as they'll be watching the situation and seeing how things go. What kind of signal did we get from you people yesterday? I was trying to gauge, are you people hawks or you are doves? You've been doves for a very long time. But I also try to read between the MPC, okay, inflation would be a bit considerably high, the condition is still uncertain. So I was also trying to see, okay, if Russia-Ukraine continues, inflation continues to go high, whether you tighten, just tell me what you people.
Okay, this one, I will say it in simple terms. You know, there are 2 markets we're looking at. We're looking at the investors and the players in those markets, and then we're looking at the generality of the populace. Governor has emphasized that is preference for that generality of the populace, the general public, the rest of the economy, the highly vulnerable people. How is the MPC decisions impacting on them? And what is important is how are we able to stimulate that sector of the economy to either continue their production process so that people retain their jobs and their incomes, and that income has real value, you know, working at the inflation. Then the other side is to look at these investors. How are we able to mobilize the resources that are needed, capitals now, for investment purpose within the domestic economy? Don't forget that individual borrows, the government also borrows. So we need to create that investors environment where the rates, money market rates or fixed income rates, are reasonable for that to attract inflows. Then the third part is to look at also foreign investors, because we know that domestic government's capital is not enough. So we need foreign investors. So we're also looking at that bucket, at how is our fundamentals, you know, attractive for foreign capital inflow. So 3 different buckets that we are looking at. But what is important is from this MPC, what we will see is that 1, the MPC members are kind of already, some members, there was a member that voted for 50 basis point increase in MPR. 3 other members, 0.25 25 basis point increase in MPR, then the other 6 now voted to hold. That means that the MPC members are already getting sensitive to these fundamentals, particularly inflation, particularly shocks from the external environment, that we need to start. Ghana, Egypt have already started adjusting rates. We play in the same global space. We're all looking for international capital flows. We're also looking for how to improve employment and make GDP, our growth, inclusive for a larger number of people. So we want a situation where everybody is able to, you know, benefit from these policy directives of the central bank and the fiscal authority. You see that the central bank governor was also emphasizing, I mean the MPC was also emphasizing that the central bank should collaborate with the fiscal authority to address this, to address that. So there's a need for teamwork in that space to be able to have a kind of holistic, you know, approach. Monetary policy is more for short-term demand side management. Fiscal authorities deal with supply side, infrastructure, long-term structural issues. So there's a need to marry the 2 to be able to get a kind of a comprehensive benefit to everybody.
Thank you very much, Dr. Mahmud. I hope we've been able to do justice a bit. I know there are many issues, but just like I said earlier, this is once in 8 weeks tonic. So thank you for coming.
Thank you for having me.
I've been speaking with Dr. Hassan Mahmud, who is the Director of Monetary Policy Department at the Central Bank of Nigeria. We've been trying to unpack the decisions of the MPC that was held yesterday. So many things to still look at. Continue to watch the program subsequently for more. That's the much you can take on today's edition of the program. I am Nancy Naji. Be the best you can be and be that change that you want to see. I'll see you all again next time. Bye.